Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase, a podcast where we help you focus on market events that we believe truly matter. Now, China's GDP and other macro data yesterday held a little bit for everyone. For the optimists, Q4 growth beat expectations and 2021 full-year GDP growth came in a smidge above 8%. For the pessimists, though, much of the growth was still led by strong exports, a trend we've seen across the region, including with Singapore's own non-oil exports data for December. But consumption activity in China, of course, looking a little less robust, at least relative to market expectations. In our view, this explains the surprise interest rate cut on medium-term loans by the PBOC on the same day, a move that we'd view as part of a slow, gradual change in policy direction that may very well involve some further policy easing. Now, for markets, the implication is that we'd watch two things specifically. First, we'd watch how this impacts the change in lending across the economy, or what economists like me like to call the credit impulse in our own jargon. An improving credit impulse does usually feed into improved growth and equity market returns eventually, but often with a long lag in the region of about 6 months. Second, though, we'd also watch if this policy easing helps Chinese and Asian equity markets hold key technical supports around current levels. That's something we'd discussed last week, of course, but if you want to take a look at the chart, please pull up our last weekly market view. Now, looking ahead, the key event today, of course, is the Bank of Japan's policy decision. Now, as an aside, like me, if you enjoy historical trivia, you'll be glad to know the Bank of Japan's website hosts its own History of and Trivia About the Bank section. Now, what I found interesting, of course, was how Dr. Tatsuno, who designed the bank's head office building, was influenced by the National Bank of Belgium and emphasized order and dignity in the exterior design of the building. Now, compared with that, the Japanese yen, of course, has a far racier reputation in FX markets, but given the Bank of Japan will most likely leave policy unchanged to avoid capping any nascent uptick in inflation, the pair may very well be set to deliver a little more order than usual. Rising US bond yields undoubtedly placed some downward pressure on the yen recently, but with the US dollar starting what could be a relatively choppy peaking process, dollar yen may similarly be set to trade in a range. In terms of technicals, we expect resistance at 115.5 to hold and allow for another test potentially of key support at 112.5. This view, of course, coming against the longer-term backdrop of the yen continuing to be inexpensive on valuation grounds and remaining a favored funding currency. So something to keep an eye on for today, but that's where we'll take a pause. If you enjoyed this podcast, once again, please don't forget to rate and like it. Thank you very much for listening, and we wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.